Next up today will be a panel discussion around the future of the automotive supply chains. So we're going to have some experts here, which I'm going to invite to come to the stage. Starting from left to right, Christian Mildner, who is the head of corporate sales at the London Metal Exchange. Yeah, you can give him a welcoming applause, please. Thank you. We have Alexander Trost, who's one of the managing directors of Lech-Stahlwerke and among the managing directors responsible for sales. Welcome, Alexander.
Hi.
And last but definitely not least, we have Adam Megginson from Benchmark Minerals joining us. Welcome, Adam.
Thank you.
Adam is a senior analyst and especially an expert on everything lithium in the Benchmark team. So welcome to the panel. Before we start into the discussion, I think there is a short Mentimeter survey prepared just to get some impressions from the audience. So if you would get out your phone on Mentimeter, we have 3 short questions, and we start with this one. Which car OEM, in your opinion, is leading the way in sustainability? VW, Toyota, BMW, Daimler, Volvo, Tesla, and Ford. If I missed an important one, feel free to mention it. Okay, so I think we have a clear winner, and the clear winner is, according to our audience here, Volvo. What about your own purchasing decisions here in the audience? So if you look at what type of car you are currently driving, is it still gasoline or diesel? Is it a plug-in hybrid? Is it a fully electric? Or is it a I don't drive a car at all? Okay, I would say that's also a relatively clear picture. We have 20 people driving gasoline and diesel, and only the minority already driving a fully electric vehicle. What about your next one, the next purchase decision that you are going to make when buying a car? Will there be a change? Okay, so 15 out of the audience would say the next car is going to be fully electric, which means there seems to be a trend from gasoline, diesel into fully electric vehicles. And especially if you are having a company car, there's also some significant tax advantage, at least here in Germany. So I can understand that from an economic logic also, why this might become more attractive in the future. So, with those opening questions, looking at the topic, what's happening in the automotive supply chain? In the past, there have been some very bold visions put out by car companies, starting with the audience favorite, Volvo. They want to produce a climate-neutral car by 2030, and that's already really around the corner. They've partnered with SSAB to use fossil-free steel for their climate-neutral car, and also according to this, they want to be the first one along this journey. With BMW, they say 2040, they want to produce a carbon-neutral car. That's a little bit further in the future. And Mercedes wants to do this by 2039, and they have partnered with Stegra, which is a steel producer in northern Sweden that is setting up a green steel facility with hydrogen to produce a direct reduced iron. Looking at the last slide, so if you want to produce a carbon neutral car, what does it actually take? And we're not just looking here at the life cycle, so the gasoline or the electricity, but just when you pick up your new car from the factory and you look at what is the carbon footprint of this car that you're picking up from the factory, And yes, I've chosen Volvo here because they are very transparent where the carbon footprint comes from. So if it's a fully electric car, then actually 44% of the carbon footprint comes from the battery pack. So Adam will comment on this. 17% will come from iron and steel parts, 15% will come from aluminum parts, and then there's some plastic, some electronic, and some other stuff. So overall, 18 tons of CO2 to produce a car, and at least Volvo wants to do this to get away of these 18 tons in 5 years. So how is that possible? That's our opening question for the expert. So Alexander, coming from the steel industry, certainly can comment on a lot of steel topics. Christian, coming from the LME, certainly everything that's base metal he can very much comment on, but also on generally how markets are moving and how markets can create incentives. And Adam, I think you are our battery metal expert. So I'm looking forward to your opening statement and maybe a very short introduction of your person and what you do.
Who will start?
Alex, yeah.
Okay, let's start. Alexander Trost, my name. I'm Managing Director, Sales and Logistics at Lech-Stahlwerke. Lech-Stahlwerke was founded in 1972. We have 2 arc furnaces in place since then. Our initial capacity was about 300,000 metric tons. Right now we have a capacity of 1.4 million tons of carbon, not neutral, but we have a very low carbon content right now because we produce steel out of scrap since the beginning, so since 50 years. The product share is about 50% construction industry, 40% automotive, and 10% energy. So our advantage is that we have a lot of value chains within our company group already. So we process our steel within 3 rolling mills, and then we have several peeling lines, heat treatment lines already within the company, and then we get this product to our customers. The question arises here was, how fast we are. Very important to understand that we're doing long products. Long products are used mainly in the transmission powertrain area of a car. So we have a very low content right now from the 70%. Our impact is not that big. The second, you need to understand that most of the long product producers in Europe already using an EAF, so it's not a big leverage then. Yeah? So we have a few BOF mills which are doing long products. So the higher leverage here is flat products, Salzgitter, ThyssenKrupp, Tata Steel, all these producers. They have a bigger challenge because they have the BOF route. Yeah? So we did our homework already. We can reduce with renewable energy. DRI plays maybe a role, but our PCF is very low compared to the others. So actually for us it's not that much to do.
What about the topic of electricity? How is it in Bavaria to run the only steel mill in Bavaria?
That's right.
What is the mix? We hear that they don't like wind energy in Bavaria too much.
That's not true. We do like wind energy, but it's not efficient. That's the problem. So we have a lot of PV energy renewables in our area. It's stable. It's still stable. Our mix can be as low as you want, so we can use renewable energy in the process, but it depends on the customer demand. So construction industry is more focusing on a low PCF than the automotive industry. And they pay for it. The automotive industry don't pay for it. So that's actually the main problem we have.
Thank you, Alexander. I think we will get back to that topic in a little bit, and talking about also construction. Christian.
Yeah, thank you. Hello, Christian Mildner, my name. I'm the head of corporate client development at the LME. And the LME is, of course, the major marketplace for non-ferrous metals. Copper, aluminium, lead, zinc, nickel are priced and traded on our market and are most likely in many of your supply or distribution contracts. So our job is basically to make sure that those prices are as good as they can be. Now, Sebastian has asked us to respond to the question, how do we get to that zero carbon car in 2030? And he asked me to cover that from a base metals perspective. But before I get there, I'd like to be a bit controversial. I don't really like that phrase, zero carbon car, because the only zero carbon car you can produce is the one that you do not produce. Now, that's not the way forward, but let's just be realistic and talk about minimum impact car or maximum acceptable impact car. I think minimum impact is better. So we need to get down there to that minimum acceptable impact. If you produce something, there will always be some carbon involved. Let's ignore offsets for the minute. So we are currently here. How do we get from here to there? It's a daunting route. From a base metals perspective, I see basically three things that need to happen. First, there needs to be demand. Second, we need the data. We've heard about that before. And third, there needs to be a price signal. Alexander just alluded to that. Let me just briefly touch base on each of them. So demand. People want to do the right thing, but don't necessarily want to pay more for it. So there will be some people who pay more for a local minimum impact car, but that will not move the dial. The answer will be in regulation. And there are a number of regulations already in Europe. There's a lot happening in China. As we have just heard, there is a lot happening in India, which is really encouraging. So if you want to drive into the city center, you will need to have a battery electric vehicle, otherwise you're not allowed to go there. It's as simple as that. So demand will be there. Second, data. We've heard a lot about scope 1 and 2. The car manufacturers, they manage that. They have very good grip on that. The issue is the embedded emissions in your steel, battery, and of course, non-ferrous metals. And the only way you can reduce that is to have good, reliable data. That's something where we as the LME try to help. We do have a platform which is called LME Passport, which is a digital registry for certificate of analysis information, but also supports disclosure of sustainability credentials. So the good work producers do on carbon footprint, climate impact, land use, tailings management, etc., can be shown there. That is voluntary, not everybody does it, but also, for example, for CBAM, where there is a compulsory system, the 72 aluminium producers on the LME will produce their CBAM reporting information on passports. So we're trying to help with the data. Last point was a price signal. In order to do something, people need an incentive. In order to invest in low carbon, in more sustainable ways of production, people need to know what the payoff is. And that is why we have published a press release recently with an announcement that we aim to publish sustainable metals premiums. I stress sustainable because, as we have heard from Aramed, from CBMM, sustainability is much more than just the carbon footprint. And yeah, those are the three things which we see are key, and looking forward to discussing that with the panel and the audience.
Yeah, and maybe just one short comment on this. So most of us remember this nickel story that was in the news, that also some Australian producers said, oh, well, there's just one nickel price, but some of us, like in Australia, we're producing with a very low carbon footprint, and some others in Indonesia and China are producing with a very high carbon footprint, but there's just one nickel price. So the LME should do something about it. And I think the LME has taken some actions to make sure that only responsible brands are accepted, but the LME has also said it's not a globally accepted concept. That's why we cannot have now two different nickel contracts, one with low and one with high carbon, but we have one nickel contract, and the discovery of premiums needs to be discovered separately.
Yeah, absolutely. So we have seen, especially in 2022, that splitting liquidity is not a good idea. So there needs to be one standard. And just as a reminder, our market is a market of last resort. The metal on our market needs to satisfy minimum standards and not maximum standards. So for example, supply chain management, the OECD guidance, child labor, conflict financing, there's a consensus. So that is part of your brand registration threshold. If you want to be an LME brand, you need to manage your supply chain responsibly. Now, on the sustainability side, we just don't have that consensus yet. But that's not a reason not to do anything. And yeah, that's why we have proposed to publish those premiums. And those premiums, they shouldn't be a divisive tool. One produces better than the others. Producers from India are carbon intensive, hence they are bad. That's not the solution. The world needs metals. Metals are a force for good because they enable the very energy transition which we are all dependent on. And yeah, so in a nutshell, what we're proposing is we will take data from LME Passport, where we have the carbon transparency, and we will also combine that with standards, for example, Copper Mark, ASI, standards for the industry, by the industry, which encompass much more than just the carbon footprint. And we will combine that with trading data, which we aim to collect on the Metalshub platform, because we believe legally binding transactions is the best data point you can get for pricing. So yeah, we aim to provide a solution which lifts all boats, because even the lowest carbon producer in this room here or globally, they also need to still decarbonize and be better at being more sustainable. And yeah, hopefully that is a contribution we can make to get us all along that journey.
Thank you, Christian. Now moving to the battery raw materials. So as we've seen, battery raw materials are extremely heavy in their PCF. They make up almost half of the carbon footprint of a car. And the idea to move to electric vehicles is to become greener and to do something positive against climate change. So how are we going to decarbonize those extremely heavy battery raw material? And is it possible at all? And is an electric vehicle actually helping?
Yeah. It's a pertinent question. I think the split you showed there, the pie chart, the battery is a major focus point in answering that question. But let me first introduce myself. I'm Adam Megginson. I'm a senior analyst at Benchmark Mineral Intelligence. We're a market analysis and data provider for the battery supply chain. So I'm in the price team. I focus on our price assessments that cover materials such as lithium, nickel, cobalt, graphite, synthetic graphite, manganese, basically any of the important raw materials that are used in battery cells. But we also forecast supply and demand and undertake consultancy projects as well as sustainability analysis. And I'm glad that we've already touched on green premiums, more on that in a moment. But I think the resounding conclusion is if you really want to decarbonize mobility, the answer is clear. We have to all ride bicycles. But short of that, and for applications where that's not appropriate, I think electrification is the key answer to the question, but not all electrification is equal. The battery supply chain can be very extended. Material is shipped to all sorts of different locations for different processing steps. It's very elongated. And along that supply chain, you get a lot of opportunities to make decisions about different processes or different routes. And they can yield very different emissions profiles for carbon. And so really, when we talk about kind of short-term wins with decarbonization, it's about making those lower carbon choices attractive choices. But at the same time, comparing the price of material in the market, is there a green premium? I think it's something that maybe naively some market participants hope that companies would do out of the goodness of their heart, but in reality, there needs to be a financial gain and a financial benefit to choosing greener material. And it's something that we track very closely as part of our price assessments. And it's not something that we've seen borne out in traded material over a consistent period. So there's still work to be done for that to be incentivized, so the choice is obvious to go with a more environmentally friendly or kind of carbon neutral route. But I think there's more work to be done to make that the attractive choice. So yeah, when it comes to green premiums, it's something that we don't really see as much driven by the environmental profile of the material, unless that is stipulated and regulated for. And that's pushed as something that a company has to do in order to comply. But even that regulatory framework can be a bit too flexible. So I think it was just yesterday that the EU Commission proposed relaxing the due diligence requirements under the battery regulation, basically giving a 2-year extension to those requirements for companies of a kind of medium size. There's always this interplay between industry being competitive on a price and cost basis, but also making sure that those rules, that the players that have kind of adapted to be able to comply are not penalized when the rules are relaxed or pushed back, because then you have a situation where the non-compliant companies benefit.
So you mentioned regulation. One piece of regulation is the battery passport. Maybe you can talk a bit about how this might change some business practices.
Yeah, no, I think the battery passport is one of the kind of leading examples of bringing a bit more transparency and traceability to the supply chain. Let's take a typical route for kind of the cathode side of the cell. You maybe mine the spodumene in Australia, and then it's shipped to China to be processed into lithium hydroxide, and then that could be shipped to South Korea to be turned into cathode active materials. Maybe that would be shipped to Japan to be turned into a cell. Maybe the pack facility is somewhere else in Asia. Then that's shipped to Europe to be put into the EV, for example. I mean, it's a protracted supply chain, and unless you have a tracking system in place, how can you fully verify and compare that cell, that battery pack that had that kind of route is comparable on anything other than cost, unless you have a passport system? So I think it's the right approach, but hopefully other jurisdictions take a similar approach so that it's not unfairly kind of an unfair limitation on European players that they have to comply, and then other jurisdictions don't have the same requirements and they can just compete on cost, which is easier to do.
Yeah, thank you very much for that explanation. Maybe going back to steel. So you said the long products, that's not the main problem when you want to reduce carbon emissions for producing a car. It's more on the flat side. It was interesting to hear from Mr. Deshpande, the Indians, scrap doesn't really play a big role because they say we don't have enough, it's very expensive, so we need to go a different way and to grow. But in Europe, we still have surplus scrap because we are exporting some of it currently into other regions.
50%.
So my question would be, if it's not the long product, it's actually the flats. We have scrap here. We can also blend scrap with some virgin materials like HBI, which we might get competitively from other places. Why are European steel mills not investing in new capacity to produce flats, not in a blast furnace, but in an electric arc furnace, to fill this gap in the market, to have low carbon steel for flats for the automotive industry? Why are these investments we are not seeing them to a large degree?
Yeah, it's not so easy to explain. What we are focusing on, we need more clarity in demand. So that was also a thing you pointed out earlier. the demand side is not clear, even though if it comes to the engines. Yeah, we assume that electrification will happen. We all know it's not that fast that it was predicted, so it will take longer, much longer. Plug-in hybrids are a valid solution for the meantime, and combustion engine, they won't die. So it will remain in the market. The problem is the car makers here in Europe, they even don't know what the market will be and where are the markets. So the demand side is not clear, not for long products, not for flat products.
Yeah.
It comes on a number of units. So how many flat material do you need for car production? So the prediction for the car manufacturing production the next few years in Europe will remain by 17, 18 million units. But we don't know what kind of car, electric car, plug-in hybrid. So it's not.
If we look at this room and we trust the survey, there is, let's say, some shift to fully electric vehicles. That is clear, at least from this not representative audience, I would say.
Yeah, this is what Europe believes. But if you look on other countries, and it's a different story then. So
and they don't have to buy the cars; they can just press the button here. Whether they're then willing to pay 8,000-9,000 more for a fully electric car is also then written on a different piece of paper.
No, exactly, and this is actually these uncertainties brings the steel industry in a very difficult situation. Yeah, so you don't know where the demand is going. We all know that we have overcapacity right now. Why should a steel mill invest?
Yeah.
So, and can we invest? I mean, the last few years cost us a lot of money. So I don't believe that our competitors, we don't have that much cash aside to invest in whatever market right now. So that's the main reason. So we need more clarity in the demand side, also on the supply side. So consolidation is needed, certainly. Regulation and energy. So these are the factors which maybe they are right now an obstacle for us, for our industry, to invest more. And we don't know what to get out of it. So the price thing, we don't know.
Yeah, I think it's a very fair point that if you want to make investments, you need cash, and you will need to put down some equity. You cannot all get the money from the bank, and if as a steel industry you are not making money, where should the cash then come from?
Exactly.
That's definitely one of the challenges for these new bold investments.
Yeah.
Christian, talking about price discovery, I think the concept makes sense for everyone. You need incentives to invest. Also, as a bank, you give a company money when they have a good business case. If they don't have a good business case, why would they give you money? To have a good business case, it's good to have some clarity on what will be the price of the product that the company will produce out of that investment. And clearly, price signals would help there for financing companies to say, this is a good investment, we want to invest into this project. But how is it going to work? What do you think could be the incentives for companies to participate in price discovery?
Yeah, very good question. And let me just go one step back, because we were talking about premiums, and Adam said and Alex said the same thing. There needs to be an incentive, and we're fully aligned with that. Now let's just go 10, maybe 5, 10, 15 years further. I am convinced that the sustainability elements will be part of our brand listing requirements. In order to be an LME brand, you need to fulfill certain sustainability credentials, and you need to align to a certain carbon threshold. But we are not there yet. And in the meantime, it's just not acceptable that nothing happens. So to the point, how do we go about that? So our vision is we take the information from LME Passport together with anonymized transaction data from the Metalshub platform. Now then, we basically have the best-in-class information. The information on LME Passport is born when the metal is born. We can't get any closer to the source, so that is good, reliable information. Secondly, trading information from the Metalshub platform, you have all details, all relevant elements available to take into account. Putting that together, we can determine a sustainable premium and ideally find out what that is. Now, for the time being, I'll be very transparent with you, we do not have enough trading data on the platform to support that. So we have the chicken and the egg situation, and how do we solve that? Now, we believe that somebody needs to get the ball rolling. And we have that quasi-regulatory role as the LME. So we think that is something we can do to push that stone and get it rolling. So in order to start, we propose to publish sustainability premia based on journalistic assessments. Now, that's not the preferred solution, but in order to start, you need somewhere to start. So, and our hope is that that price, which will be published, will lead to more engagement on the platform because people know they can directly interact with that price on the platform. More activity on the platform leads to better price formation, better data points, leading to a better premium and a more trusted premium. And hopefully, by kickstarting it with the journalistic inputs where needed, we can create that virtuous circle.
Sounds good.
Can I add to that?
Sure.
Yeah, I think it's interesting. So we've been tracking at Benchmark our sustainable grades for lithium carbonate and nickel sulfate as well as nickel metal for nearly 2 years now, these are confirmed transactional data that we collect in our price reporting agency function, which I'm in. And maybe I can just explain a bit how we had arrived to that sustainable grade. So our sustainability team analyzes every company in the supply chain and scores them on 84 different sustainability metrics across environmental, social, and governance factors, and updates that data quarterly. Those companies that are rated 70 or above on the matrix are deemed as industry leading, and our price assessment for our sustainable grades only takes into account material from those producers that are scored as industry leading. And I think that it yields an interesting result now, which is that so far we haven't seen a consistent premium. It's something that we're going to continue to track. It's something that I think will need to have more robust regulatory incentives to make people prefer that material. I mean, there have been periods where that material is the same price, small premium, small discount, just based on the different producers that are included. So typically, a larger producer maybe has a better quality perception, is able to secure a higher premium in a given period, or they're selling kind of a larger volume of material, so that's a slight discount. But my hope is that if this material is kind of going to be seen as more appealing, that premium will emerge, but it's not something that we've seen yet.
And I think it all starts with transparency. Even if there's no premium, it's good to know for regulators, for companies. So I think you're doing a very valuable job on that end. We heard about battery recycling. And if we look at 2030, 2040, it's not far away. So what's your view? How much could battery recycling contribute to decarbonizing the electric vehicle in 5 to 10 years?
Yeah, so I think recycling is going to be a bigger and bigger part. I still think, our forecasts to 2040 still have primary material as the main share, but obviously recycled material making up a bigger and bigger share. But at the moment, the majority of the material available is production scrap rather than end of life. And to have a fully circular supply chain, you need to be capturing that end of life material as well. We forecast that end of life material will exceed production scrap in 2029. But I think the heterogeneity of black mass, which is the shredded, the pre-treated material, is a major hurdle to that. So Europe specifically has a lot of pre-treatment capacity, produces a lot of black mass. A lot of that black mass is then shipped to Asia to be further processed. And hydrometallurgical, pyrometallurgical processes to extract materials which can yield a PCAM, but mainly will yield the constituent parts. And I think that the different cost structure in Asia makes that a more compelling place to conduct that activity now.
Yeah. So that was surprising for me yesterday. So we do some battery recycling here, but we don't produce any precursor materials. So we do the first step in the recycling, and then it needs to go to Asia.
Yeah.
What does it take for someone to say, I want to do this in Europe?
Yeah. I mean, right now, the black mass buyers in Asia are willing to pay more. So that will be the trend that you need to reverse. I think the strength of NCM chemistries, nickel, cobalt, manganese chemistries in Europe, is a good omen for recycling in Europe. Lithium iron phosphate, LFP cells, which are gaining more and more traction in Asia, especially in China. They made up over 80% of the EV cathode last year in China. But the problem with LFP is that it's not very easy to recycle, mainly because the constituent ingredients are not valuable enough for it to be worthwhile, but also because the iron contained is difficult to deal with, and it doesn't work well in the machinery of the hydromet and pyromet processes that are available right now. So I think Europe's role in recycling is only likely to expand, but that premium that Asian buyers are willing to pay needs to reverse, or else I don't think that
and the question is, why are they willing to pay a premium? Are they more efficient in processing? Do they have better technology, or are they subsidizing an industry to get it going, maybe in the beginning?
Yeah, all of the above, I would say, on that one. So it's, I think, with black mass, it's so heterogeneous. People may buy a shipment, and when you assay one part, it gives a certain, material split, and another part of the same shipment can give another material split. And what the capacity in Asia has been very good at is being able to be flexible, to adapt the process to account for those differences. And I think the Metalshub platform is a great kind of space for recyclers to be able to account for those differences. So when they receive a shipment of black mass and it's kind of a different proportion of materials than they were expecting, they're able to supplement the mix they're targeting using the Metalshub platform.
Yeah, it's nice that you say that. So maybe you followed that this week. We had a press release with a black mass producer, Primobius, that are going to use Metalshub for selling the black mass. I think it's still a very immature market that is beginning to form, and there is not so much standardization yet. So I think that's very exciting that this new commodity is now also electronically traded.
For sure.
Maybe one last one before we can open up for questions to the audience. So if we look at the US is withdrawing from some climate commitments. If we look at BP, they are going to do fossil for longer and also more, so they're stepping back from previous commitments. What do you think about the European automotive industry? Are you expecting some changes to these visions and commitments also from the automotive industry? Maybe starting with Alexander
From the customer side, yeah. For sure, we talk to OEMs as well, but right now it's in waves. In the middle of the year, they are very open to talk about sustainability and to bring things forward. Then we are coming close to the price negotiations. Next year we start again. So no, I don't see the will right now to be honest, in the automotive industry to really work on that topic. I don't see it. There's no will to pay for it. They apply all the regulations. They try to get influence of the regulations to get rid of it as long as they can. Sorry to be that open, but this is, in our opinion, the one problem. Construction industry is behaving differently, completely differently in Europe. So they are open and they are they put more energy in. So all of the OEMs, they build these big teams of sustainable teams, and they come to your company. They want to understand everything, get all this data stuff together, and then they do the evaluation, say, you're good? Yeah, Class A, but we don't pay you more.
Yeah.
Okay,
and what's driving it in the construction industry? Is it legislation? Is it motivation by the people involved?
Yeah, public projects. So the government just say, okay, we need an EPD of 600 kilogram per ton. Yeah. That's it. So whether you fulfill that requirements or not, if not, you can't quote. Yeah. That easy it is. Yeah, so that requirement we don't have from the automotive industry. So they say it's good to have a very low PCF in your product, but it's not getting awarded right now. Yeah. So
that's also what we heard from India, that public procurement is something that can change or drive change.
Yeah.
Christian, what's your view?
So last week there was an aluminium conference in London, and I had a very interesting discussion with one large OEM. I won't call any names, but they told us, we absolutely do not like sustainable metals premiums because it discourages us from decarbonizing. And that made me thinking, because I didn't really understand that if you have a clearly identifiable premium for less carbon, surely that should make your life easier. And you know, the person just told me, no, we vet our suppliers, we know exactly how much they emit, but we don't pay a penny more. Now, that's one side of it. You alluded to what's happening, the announcements from BP and all of that. And Alex already mentioned this goes in cycles. You know, you have more liberal politicians voted than more conservatives, and it's all mean reverting. But the current environment really separates those who have claimed this is part of our DNA, and also shows where there have been mutations in that DNA at the beginning of this year out of a sudden, right? So I'm still confident. Personally, I'm most encouraged by such testimonies from India, you know, the stories which you hear from China. They have clearly understood which the direction of travel has to be. And right now, in the West, unfortunately, we go slower, but the direction of travel hasn't changed. So, yeah, that's my hope.
Yeah, Adam? I guess I can offer a slightly different perspective. I think it was the CEO of Stellantis who said, when the EU was considering relaxing the 2035 net zero target, you know, please don't change the target. We've made our business plans with a view to reaching that level by that date. So to relax them creates more uncertainty. It opens the door to them being changed in the future. And I think when the rules are changed like that, it makes everyone a little bit less certain that the rules will stay what they are when they're introduced. It makes everyone have a little bit less faith in the regulatory framework. So I think it's an interesting point about the premium kind of potentially discouraging that sustainable material from being chosen. But you know, I think the overarching theme is that consumers aren't willing to pay more. So maybe it's not such a bad thing if the sustainable material doesn't command a big premium. The only problem is the producers say it does cost more to produce sustainably. So maybe there's a disconnect there between buyers and sellers.
Yeah, I think this topic of changing the regulation all the time, also we see that in the steel industry. So a very big player, ArcelorMittal, they say, we are not sure where this is going, so we are just holding on with our initiative and wait and see until it's clearer what will happen. And that is not what is needed. So people waiting to see, but we need investment decisions, ideally in Europe. With that, we have a few minutes for questions. So anyone in the audience who wants to ask a question to our panelists? Otherwise, we have a few questions here on the screen. So maybe here from the left, that sounds like a question for you, Alexander. Do you see flat steel products produced on EAFs from scrap in the future for structural body parts?
They started already to trying. It really depends on the requirements. But if you talk about chassis parts, we have very high requirements on the steel quality. It's possible to do it out of scrap, but it's very expensive.
Okay.
You need high quality scrap then. Yeah. So you need to secure that you have that high quality of scrap. You can do it with the with ladle furnace. That you get the quality done. That's possible, but it's not so easy to do. We see that some of the steel producers are going that way. Marche-Gallia Group, for instance, they're investing like this. Salzgitter did try several things in that area. There is potential. But the DRI or HBI process might be more promising.
Okay, thank you. Okay, then the next one here. How does the carbon intensity change if an automotive manufacturer uses NCM versus LFP?
I love this question, but I think I'm going to illustrate the point I made at the beginning of the panel by just comparing the difference within an NCM cell. So we're here in Germany. I thought an appropriate example would be to choose the Volkswagen ID.3, available with a range of pack sizes, average pack size 60 kilowatt hours. But with a fixed NCM 811 cell, the carbon intensities can change dramatically based on different choices throughout the supply chain. So let's take the anode. You can choose to use a synthetic graphite anode, but if you choose a natural graphite anode, that reduces carbon intensity by 11%. You could make the ID.3 in a gigafactory in China, or you could make it in Germany. If you were to make it in Germany, carbon intensity would be 6% lower. If you were to use hydroxide, lithium hydroxide from hard rock, so spodumene, that would be 4% more carbon intensive than using brine. And if you were to use a rotary kiln electric furnace, RKEF furnace for the nickel, that would be 28% more carbon intensive than an HPAL route. So overall, just within that one NCM 811 chemistry, you're talking about a potential 50% difference in your total carbon intensity throughout the supply chain. So I think I would put to the person asking that question, you know, there is no one LFP cell, one NCM cell. The route that you choose through the supply chain can have massive implications for the carbon intensity. And I think that's why things like the battery passport are so important, to be able to capture those differences. And I think this conference has actually given me a lot of hope that traceability throughout the supply chain is improving, and a lot of people are working on this problem to try and increase the digitalization and traceability. You know, blockchain is often used as a buzzword. I think this is a much more useful application of blockchain than NFT ape art. Yeah.
I think you should have a conversation with our CTO if he's in the room, who is a bit skeptical whether blockchain is always it can work with a blockchain, but maybe there's easier ways in technology to achieve the same goal.
Perhaps.
But yeah, it's not an easy one because you think NCM, there's nickel in it. Nickel has a very high carbon footprint. It's not so simple. Markus, the last question before we...
Yeah, a very quick follow-up on this between NCM and LFP. The latest numbers from April, show now that the LFP is really on the rise. In China, it's more than 50% now. And the previous assumptions also that your company did, that the NCM will be minimum 50% by 2030 is obsolete, I think. The NCM will, because of the cost, nickel, cobalt and all that, will become a high-performance battery for luxury brands, mostly Germans, etc. But the LFP goes away. And now we come to the recycling. You said a very important thing. The LFP is not expensive enough, and the ingredients, the metals in it, that the recycling probably makes sense at all. Would you say, or the following hypothesis, LFP become more and more, and we are importing more and more BYDs, Teslas from China, who majority is LFP, that these batteries will only be recycled then in Europe because the tourism, the transport cost, prevent them from going back to China to be recycled there. So that could be a future opportunity for the European recycling industry, or how do you see that?
For sure. I think to your first point, I think LFP market share has impressed everyone. I think the technological advancement there in terms of range, it was always a lower energy density chemistry, and so it was seen as only appropriate for two-wheelers and shorter city journeys, markets where there isn't range anxiety, so China being the major one. But we still see a role for NCM in Europe and North America, places where people, well, maybe they don't actually do this, but they think they want to take a 500-mile road trip at the drop of a hat. So we still see NCM as an important part of the mix. I think the other element is, raw materials prices for nickel and cobalt, well, cobalt not as recently, but for a different reason, have been falling, and actually that has led to a bit more of a stabilization in the market share for NCM. But a lot of that demand is driven outside of China, and I think it's more of a structural issue of EV demand in China being consistently strong, and outside of China underperforming outsized expectations. I mean, we're still talking about 28, 29% year-on-year growth in EV production, which is pretty blockbuster compared to most other industries. It's just lower than 32, 33% that everyone was kind of planning for. To the second point, I think there's a big opportunity to leapfrog technology. Okay, so maybe NCM battery recycling operations in Europe are a little behind what's available in Asia, but perhaps the opportunity there is to develop an LFP recycling technology that leapfrogs the current incumbent approach. But it's no small ask. I mean, if you talk to any recycler, they'll tell you that there are a lot of inherent problems with LFP itself. I think more recycling design in the design stage of the battery is going to be the real key to making LFP a more viably recyclable chemistry. You need to think about the end of life at the start of life.
29% per annum growth in electric cars.
Yes.
Is these the numbers you are working with? Is this pure full electric, or is that including the hybrids?
I believe that figure is including plug-in hybrids as well.
that's including that.
So
coming
BEV
to
and
your point.
PHEV.
And this is from IHS, or who's the source for that?
That's from us.
Your own? Okay.
Yes.
Okay.
So I think that's a good positive note to end this panel discussion. For European battery recycler, there is an opportunity to maybe leapfrog the Asian recyclers when it comes to LFP technology, but surely it will require a lot of research and investment to make it happen. So thank you very much. Please give a warm round of applause to our panelists.